I basically have had a cash rate forecast above 4% for over a year now. And when I first put that out, I was seen as some crazy sort of extremist. And that was the lowest possible number I could put into my forecast given fundamental economics. I have been incredibly surprised by how banks have dragged their feet on this. I think it's because they're obviously not keen on being unpopular, even though that's part of their job. And also, I think one of the things that has most disturbed me is the Commonwealth Bank's economists who they were talking about rate cuts, whether or not it was to follow a rate hike, but rate cuts 3 or 4 months ago by the end of this year. And I think they're still emphasizing the point that rates will come down next year. Now, let's just put this in some context. We currently have inflation 3 times the target or 2 times the target at around 6%. And the thing that's most disturbing is they are one of the top 15 mortgage books in the world. They probably have the biggest variable rate mortgage book in the world. And their economists, with inflation twice the central bank's target band, are saying there should be rate cuts. Now, if they just took a little step back and had to think about how that presented, then that's crazy. The fundamentals of the interest rate cycle and prediction have been tricky because there's 2 important channels that which you sort of try and judge how monetary policy or the short-term interest rates affecting the economy. One is the nominal change in rates, i.e. the 400 basis points of increases we've seen this cycle in the last 12 months or so have been big. And that's what everyone's been focused on. That has a cash flow effect. That's what means we have to pay more for our debt. But an economist really needs to also take into consideration the level of real interest rates. And that's the end game for economic models and I believe for the economy. And of course, we've still got negative real interest rates. We may get a 0 real interest rate, i.e. a RBA cash rate above the core inflation rate by the end of this year. But history shows that we've never in this country or any other got inflation under control with a real interest rate below 2%. In fact, it's had to go up to 3 or 4%. Glenn Stevens had to do that in 2007, and that's happened all around the world. So in terms of misreading this tightening cycle, I think there's been way too much focus on the nominal channel, that is the nominal increase in interest rates, what that'll do to funding costs, and not enough appreciation of the need to look at where the real interest rate is. And of course, the other thing is the politics. And when I say politics, I'm just not meaning about Canberra. I'm talking about the whole community. And this country has got a severe bias against higher rates. The voice of not wanting higher rates is extreme.